Hey guys, this is Rob, the Baltimore real estate guy, and I'm here today with Bob Kemp from Guaranteed Rate Affinity. We are going to talk about a couple different topics, and the first topic we're going to talk about today is the market. So Bob,
Yeah.
what's the latest, sir?
Things are good in the market, Rob.
Really?
Yeah.
Okay.
So today is the first Friday of the month.
Yep.
So we get unemployment for the previous month
Right.
of July, which was higher than expected.
Mhm.
So there's kind of a saying, usually it works out. Bad news for the economy, good news for rates.
Oh,
Good
wow.
news for the economy,
Right.
bad news for rates.
Right. Gotcha.
So bad news for the economy, with
Mhm.
unemployment being higher, good news for rates.
Right.
And really this week, we've had a reduction in the rates several times this week. So
Mhm.
we're ending the market or the week quite on a high note. So the Fed was talking about rate cuts.
Yep.
And that Jerome Powell, the Fed chairman, spoke this week, and he's always got to be very careful what he says,
Yeah.
because the market can move dramatically on anything he says. So
Right.
he didn't say there was going to be a rate cut in September, but the market believes there's going to be, and they're pricing in a rate cut. So that
Gotcha.
means that the rates have come down
Gotcha.
because of that. But if we don't get the rate cut,
Right.
rates could go back up.
Gotcha.
But overall, with the several positive news this week,
Mhm.
we're probably at around 6.5% for conventional,
Yep.
and around 6.25% for government.
Gotcha.
FHA and VA are normally a little bit lower
Okay.
than conventional.
Okay.
So a good week all around in the market. Hopefully that gets some people that are on the fence off the fence. Although I say you marry the home, you
Yeah.
date the rate.
Right.
So even
right,
though
right.
rates have come down and that's positive, you don't want to be concentrating on the rate. What you want to be concentrating on is the values of the homes.
Right.
And they keep going up because of the limited inventory.
Right.
So
right.
somebody that waits, let's just say they say, okay, well, rates are 6.5, that's still way too high.
Mhm.
I'm going to wait until they're in the fives.
Right.
And let's say it doesn't happen for 6 or 9 months.
Mm-hmm.
The amount of money that they're going to pay additional
Yeah.
for that home because they waited
Right.
could offset and be more
Mhm.
than the difference in the rate.
Right.
So you marry the home for the long term, you date the rate, because when rates come down, which they will, rates
Mhm.
are cyclical,
Mhm.
they always go up, they always come down, just like the stock market.
Mhm.
They're going to come down. Expectations are next spring or fall, we may see the fives.
Mhm.
That's when people can refinance.
Gotcha.
So you've got in, you've locked in the property.
Right.
So now the appreciation is you.
Right.
It's going to you because you're the homeowner
Mhm.
instead of being the buyer and having to keep paying more for the home.
Yeah.
And if rates do come down, say into the fives,
Mm-hmm.
all of a sudden you're going to have all these people that have waited to buy
Right.
that come out.
Now
But
prices
the
are very
inventory is still very low.
Right.
So now
Right.
you're going to have even more push up of the price
Right.
because of more and more multiple offers
Mhm.
until it catches up with the sellers.
Mhm.
So people always say, when's the best time to buy? Now.
Right,
Now's
right.
the best time to buy.
Yeah, and I think I've heard that before. I think somebody gave the $500,000 example where the home values have been going up about 5% or so.
Yeah.
And so if you're looking at home value and how much equity do I get in my house, and just as a rough 5%, that's $25,000 on a $500,000 house.
Yeah.
But when you're talking about a 6.5 and waiting it to come down to 6.25 or 6.1 or something like that, those rates are not your savings of a couple $100 here, a couple $100 there is not equitable to that 25,000 of
Right.
equity that you
You're
built.
going to pay more.
Right. So, you saved a few dollars now, but you've earned a lot more by getting into the market at this point. Right.
Yeah.
Okay. And then so we can't go ahead and estimate completely or have a great judgment of, when those rates will get into the fives or so. So again, to your point, you buy now where you find the value of the home that you want, based off your location and your other needs, your employment or something like that, as far as the location goes, schools for your kids,
Right.
all these different factors. You find your perfect home, and then 6, 9, 12 months later, you keep monitoring, look at those rates, and then if you need to
Yeah.
refinance at those times, then that's when you come back and you say, okay, now I have to make a change in the financial aspect.
Right,
here. So,
right, definitely. You're building long-term wealth. That's the key. Because
Right.
in our country, there's really two ways. One is investing, like
Yep.
through the market. A lot of us have 401k,
Right.
IRAs. So you're investing long-term, and the other big one is real estate.
Yeah.
Because it doesn't always go up, but if you look at over time,
Right.
you ask anybody that bought a home 15, 20, 30 years ago, and where the value is now, it's going to be much higher.
Right,
So we really want to look at, people need to concentrate on thinking about building long-term wealth, and through real estate, that is key, their home.
Right. So you just heard from Bob, the rates have come down a little bit. So around what, 6.5 you said, Bob?
Yeah.
So 6.5. So again, come in, talk to Bob, see where you're at, where your credit is, and what rate you can get to go ahead and make your next purchase. Thanks a lot, guys.
See ya.